everyone, and welcome to Beyond Focus TV. My name is Angie Daniel, and I am the hostess for the show. On tonight's show, we have an expert with us, a tax expert. His name is Marcelin from Max Real Estate Agency in Brooklyn. He's going to talk to us extensively about the new tax laws, the whole buzz about what's going on, how it's going to affect our lives, the do's and the don'ts of taxes. We're going to take a short break. When we come back, we'll introduce him to you. Welcome back to Beyond Focus TV. We are here having a conversation with Mr. Marcelin from Max Real Estate. Welcome, sir.
Good evening, everyone. Good evening, Angie.
Thanks for coming here.
Okay.
Usually when I start my show, I'll ask people to introduce themselves, tell a little bit about what they do for the community. So we'll start with that, and then after that, we'll continue.
Okay. I am Max Marcelin. I'm a real estate broker. I do business on Flatbush and Farragut, 1424 Flatbush Avenue. And I'm a registered tax preparer. I'm here tonight as Angie's guest and to talk about taxes, the new laws in taxes, and the credit that's available to you, and the thing that you should do and don't in the tax in this year, 2013.
Okay, just to really start it, because I know the middle class is going to be hit really hard. So we've heard. I just want you to kind of explain to us what are the new tax laws, what are they, and then after that we can probably talk about each of them separately, so the community will be able to benefit from it. It's like a person like myself, I don't know much about taxes. I just want to know how much money I'm going to be able to get back at the end of the year, what I can claim and don't claim. So how is the new tax laws going to affect the middle class?
That's a good question. They have 7 new tax laws which were expired last year, 2012. So actually the government went back and we adjusted them and extend them until December 31st of 2013 of this year. First we have the child tax credit, the earned income credit, the education credit, and we have the first-time home buyers credit, which got extended as well, personal exemption, and we have the medical, the dentals, and there's a few things here and there that the government made adjustment into that we can talk about. Okay.
First, I want specifically the child tax credit. Can you explain to the community and myself what that is and how it's going to affect me in 2013?
Okay, the child tax credit is a credit that's available to anybody that filed the taxes as a head of household, and you have a child that's below 17.
I thought it was 13.
It's below 17 this year.
Okay.
Actually.
Wow. Nice.
So the government is giving these people $1,000 on each child.
Okay.
For the child tax credit. That credit will be available this year until December 31st, 2013.
Okay.
And we have some other credit as well, which is the earned income credit, which every family with an income of 12,570 will get 45% of earned income credit towards that income.
Okay, so you have the child care credit plus the earned income credit.
Yes.
So these are the two credits that are affecting you.
Yes.
Like how it has, like I remembered when filing I had the child care credit. So how did that change from last year to this year?
Actually, the child tax credit, the government extended for 50%, I believe 40 to 50%. And then earned income credit, it was for 40% to 45%. I can give you a simple breakdown.
Please.
Let's say a family that earned 12,570. When you do 12,570 multiplied by 40%, they usually get $5,000 and some change.
Okay.
But this year they will get an extra $500 towards that $5,000.
So it's like
So you will be
5,500.
about 55, 5,600.
Nice.
Depends of your
Income.
criteria and your income.
Can I ask you a question? Does the amount of money that you make a difference of how much money you receive?
Yes.
Okay.
It depends on how much money you make and how much money you pay on taxes. That depends on your refund. Because a lot of people don't understand the meaning of income tax. Your taxes is already allocated. The government know exactly
How much you
make, what belongs to you, what comes to you, and then what you're supposed to get, what you're not supposed to get. A lot of people file their taxes and say, I want everything, I want a lot of money. But we have to be aware, when you say you want a lot of money, the person that file your taxes might try to help you because they're trying to keep a customer for the next year. But you don't know what kind of problem they put in you.
Okay.
They put in you into a lot of problem. Because, as far as audit, the government is auditing a lot of people that file their taxes past 2 years for education credit, child tax credit, because they are they're looking into these things because those are the credit that help you make the most money back on your return.
Okay. While we're talking about like making money back on your returns, I want to cover one thing. What can you file for? What can you, since we I just want to keep it, because I know we talk about 7 new laws. So far we are number 2. I just want to make sure that people understand when you're filing your taxes, what can you ask a return on? What can you?
You ask a return on you from your income.
Okay.
It's your income. It's based on your income and your dependent.
Okay.
And education credit.
Okay.
And those.
Can I ask you a basic question? Like it's coming into my head, and
Go ahead.
Can you claim babysitting, after school, and school?
You can
all together?
No, you have to pick one. You can claim babysitting. Yes, babysitting. Let's say you have somebody. You live in a building. Somebody in the building where you live does babysitting. You're gonna have to get that person information for you to report it to the IRS. Because let's say, for instance, IRS come back and ask you, did you pay that person to babysit your child? So you have to provide a receipt or some kind of letter to the IRS. But it's so particular about how the IRS will give you the money back because, they're based from the receipt, or if the person has a business, they need to provide you with the tax ID number. If it's a person or individual, they have to give you the social security number.
Okay, but how about if the after school is more money, like for example, I'm talking about legitimate things. If the after school is more money than the babysitter?
It will be better to claim the after school because the school will give you a statement at the end of the year for you to file the taxes with to show that this is how much money that you pay when they watch the child for you after school. And then you'll be able to...
This is not something to write for me. It's like if you have private school, after school, and babysitter, so you have to pick one of the 3. You cannot claim all 3.
The Internal Revenue will not let you claim all 3 of them. Let's say people that self-employed, you don't get the child care credit.
Okay.
Because you're self-employed.
Okay.
But you can get child care credit. Let's say you're looking for a job.
All right.
There's a percentage that the government will give you back towards
Why is that?
Because somebody that's self-employed, they don't know what kind of business you are into. You could be home and working at home.
Okay.
You could have a business at home. You could be doing anything. But when you have an income that you work somewhere and your employer give you an income, it's more stronger than somebody that's self-employed.
Okay.
You get all the credit because there's certain form that you are eligible to file.
Okay. I understand that you have to make a certain amount of money, right? Be able to claim certain things. If you have a child, you can claim out of 3 if it's school, after school, babysitter, you have to claim one. Right? And then if you have to make a certain bracket of money for you to be able to
claim those. Yes.
Claim those. Okay, I want to continue this conversation about what we can claim, but before we do that, we're going to take a short break and we'll come right back. We'll be right back. welcome back. We are here with Mr. Max Marcelin from Max Real Estate in Brooklyn, New York. We are talking about the 7 different new tax laws that people should know about. We've already covered 2 of them, which is the child tax credit, right?
With the earned income credit.
And the earned income credit. Part of what I wanted to talk to you is, you know, we know that Sandy hit Brooklyn really badly, right? A lot of people had lost their, you know, furnitures, home, how it was affected, the cars, clothing, everything. Can you, I know there are new laws for that particular casualty or this kind of group of people have been affected by it. Can you explain to the community what they are?
Yes, everybody that were living in the area, let's say in the flood area, let's say people that live in Canarsie, Old Mill Basin, Far Rockaway, and so on. You are allowed to claim up to 10% of the thing that you lost. They have 2 rules. They have $100 rules, $100 on each item, or 10% of the thing that you lost. But for you to claim those things, you need to provide some kind of proof that you were in that situation. And everybody are entitled to claim that loss, and the government will refund them about 10% of what they lost.
So if you lost, for example, I know the law is called casualty and loss, right? Casualty and loss law. If you don't have a receipt, because that's one of the things that everybody's talking about, like I don't have a receipt for my bed that I purchased like 5 years ago, right? If I can prove to, how can I prove to the government that I had a bed in my basement, right?
No, actually, you got to show the receipt that you were in the area.
So if you live in that area, that's all you need.
Yes.
That's all you need is to prove that.
Yes, you have to prove that you have a list, maybe a list, and the FEMA's number.
Okay.
A lot of people have that number.
So you need one or the other.
Yes, and even though if the insurance company did give you some money, you have to show it into the form when we're going to file your taxes that you receive money from the insurance company, and whatever the deduction is, we're going to work it out and try to see if we can get you your money.
Okay, so if let's say if the insurance gave you money when filing taxes, you have to be able to prove that.
To prove that.
If FEMA gave you money, do you have to prove that too?
You have to prove it too.
Oh, I thought that was
because
like a gift.
FEMA is part of the government.
Okay.
No matter how you look at it, because the money that FEMA gave, they have to report it to the IRS.
Okay.
Because any money that the government spends is taxable in a way.
Okay.
So you know they're gonna report it to the IRS, and these people have to report it wherever they give it to, because they give you checks.
Okay. Yeah, I know.
So you know that's how it goes.
All right.
So you know everybody are entitled. Whoever was living in the flood area, you are entitled to file casualty and loss.
Okay.
This year.
A quick question on that: can you file casualty and loss on a car? Like, for example, if you had a
if you had a car that was in that area, that's because you had a loss.
Okay.
You got a loss of personal items.
Personal items.
So you can claim that.
Okay. Since we still talk about the home situation, can you? I know that there are new home buyer laws. Can you explain to the community what these are?
They have the first-time home buyer. That the way actually the government gave each person that bought a house and closed before September 30th of 2010, they give them $8,000. The people that close after that, they will give them $6,500. That money actually is not a gift.
Okay.
It's a credit that the government gives you, and you have to repay it back.
Okay.
Everything is like a credit. So actually, they extend it as well until next year, until December 31st, 2013, and each homeowners have to repay $500 every year when they file the taxes.
Is it, or can you pay like a certain percentage, or do you have to pay $500?
$500. Yeah.
All right. So the home buyer credit, is
you don't really see it when you file the tax, because you know it comes like $500 from what you make on your taxes, and you know you have to
So it's already
file,
deducted like before you see the check, because I don't like to see money coming.
It's already deducted before you see the check. You don't even see that money.
Okay.
Yeah.
So let's continue, because I would like for the community to understand that even though these are new laws, it's just really what you would call extended laws. Is that what it is? Because the way they make it mention it's like new laws, you're thinking about like it's added situations to what you had to pay or what you had to, because we've always had the home buyer law, the earned income credit
every
law,
year the government Congress come with different laws, new laws, you know, that's good for the middle class, that's good for certain bracket of people. Depends of your income and depends of where you live. There's a lot of laws. Let's say like when Obama just took power, they were giving people $400 when you file your taxes. You know, like this year they're trying to give people like $500. They give you like an extra percentage, but they're not giving you per se like money. Let's say the earned income credit, you get a little 5%, 10% extra. The child tax credit, you got a little 5-10% extra. So that's why they're trying to disperse the money. But you know, all this credit, they're always good for a time, for a period of time. They could be good for a year or 2 years. That's why they always extend them. You know, every year they extend them. They bring them to a year more, but you know, it's okay. I hope it's okay for the people and whoever's paying taxes.
So for a person coming to you and then they're going to file taxes, right? What would be your advice in terms of those 4 laws that we've covered so far? The home buyer credit, the earned income credit, the child care credit. Because that, to me, what matters the most to me is what you call expanded education credit, which I really want to talk to you about.
Yes. You know, it depends on the person situation. Depends if you have kids, if you're filing with dependent, and dependent goes by like, you know, how long the child live with you, did you provide care for that child, and it has to be, let's say if you earn income credit, it goes by dependent. Your dependent, your child. The child has to be, let's say, for you to get an income credit, the child has to be below 18, or if the child is going to college, he has to be below 25.
And another thing, does the child have to live with you?
The child has to live with you. You have to provide care for the child for at least over 6 months.
Over 6 months.
Yes.
Okay. We're going to take a short break. We're going to continue because I want to talk to you about the education credit and how I think, personally for me, I think the community can benefit from that.
Yes.
So we're going to take a short break. We'll be right back. If you are just turning on, we are here with Mr. Max Marcelin from Max Real Estate in Brooklyn. We are talking about the different taxes, the new tax laws, what people need to do and when they're filing their taxes. Simply, personally, for me, like I said to you earlier, is what I wanted to talk about is what we call the expanded education credit. There's so many things happening within the community, within economy, work-related environment where people feel like they need to change. They need to change their environment. They need to change their living. They need to do something else. Now we have education credit where you can make that choice and be able to go to school. Can you explain the 2 different education credit that we have right now?
Okay. They have the American Opportunity Hub Credit, which the government replaced it this year with the American Opportunity Tax Credit. Which is something that you can claim for about 10 years, and they give you up to $2,500
each year.
Yes, to claim. Yes. So, however, a lot of people that claim American Opportunity Tax Credit this year, you got to be making below $80,000. If you are married filing jointly, it has to be below $160,000. So therefore, the government is giving them, it used to be last year it was $2,000, but they give you $500 extra this year, which is very good. And we have the lifetime opportunity credit. The lifetime credit is good for 4 years. Actually, you know, education credit is very broad. There's a few people that go to school and get nursing. They go to private school. Some people don't even receive the 1098T. The government, the 1098T is the statement that the school that you went to, they give you a statement for you to file your taxes with. They let you know how much money was given to you as a loan, how much money was given to you as a grant, how much you got as, you know, from Pell. So whatever was given to you as a loan, you can claim that, and you have the interest, the education interest and everything. Some people, let's say you work for the hospital, Angie, and the hospital is sending you to school to extend your education. So you can get the American Opportunity Tax Credit because that's to enhance your education so you could get a better level in the hospital. So which is very good. So, and the lifetime credit, a lot of people, that's what most people claim. Which is a form that you claim for them, and you can claim certain things. You cannot claim everything. But the American Opportunity Tax Credit, they get you to claim books.
Which are very expensive.
Very expensive books. Even if you go in, let's say when I was talking about if you work in a hospital and then you leave in the hospital to go to work, they will pay for transportation as well. That's included your transportation wise.
Nice.
Which is very good. Yes. And you know,
$27.
Yes. So they give you a lot of incentive here and there, and that help you make a little bit of money when you file your taxes.
So you're saying the lifetime credit and the American Opportunity credits are totally different?
Totally different credits.
So the lifetime credit, let me understand, you can only claim it within 4 years.
4 years.
Right?
Yes.
So that's just separate. Like,
Yes.
And why is
separate.
that?
I don't know why. It's the way the government set up that those credits, because some people keep going to school throughout their whole life. Let's say some people get a trade. You probably can claim that trade for 4 years. Let's say you got 4-year college, whichever. Let's say some people keep going to school. They did something after 4 years, they go back. They keep enhancing their education. So that's been that person have the opportunity to claim that credit for the lifetime period. So that's what it is. That's why, you know, it's different. And the other one, you go to school, you go to trade school, and you do a little school here and there. You get to claim those credits for about 4 years. But you know, most likely you cannot claim the grant that they give you. You cannot claim the Pell. You claim the loan that you have to repay back, and you get it, and you get an incentive. You get some percentage towards that back.
Okay, so I know we are almost at the end of our show. I just wanted to make sure that people understand all the new tax laws are pretty much the same law, except for the difference between the opportunity
credit, would change to American Opportunity Tax Credit instead of Opportunity Hope Credit.
Okay, so we have the Earned Income Credit, the Child Tax Credit. Can you run me through them?
We have the Earned Income Credit, the Casualty and Loss, and we have the Personal Exemption that the government still give people up to $3,600. Same thing as 2009, and you have the First-Time Buyer Credit.
Yes.
You know, that we spoke about, and everybody, let's say, for medical, they have the medical credit. You can claim medicals, even though, let's say, if you travel to go pick up your medicine, the government will give you 14 cents on a dollar on each. You know.
So how do you prove that? You
just gotta keep record.
Yeah, keep all your records.
Yes, you just got. IRS is something that goes by records. And you are entitled to hold your record up to 3 years.
3 years, right?
Yes. So you have to keep record. Sometimes when you go file your taxes with someone, the person have to ask you certain question, and they have to get certain copies from the receipt. But make sure that you, as a taxpayer, you hold those receipts for a period of 3 years, because you never know when IRS is going to come back and ask you.
So seriously, I want to ask you a couple of questions, like the true or false kind of thing, right? So when I'm filing taxes, hair, uniform, clothes for work, like, do you claim those? Do you get to claim these?
You get to claim uniforms unless if the job don't give you uniform and they don't clean them for you. Your tools, he only goes to professionals. And certain income bracket. Let's say tools, it goes by gloves, shoes, things that you use to go to work, for work. But you have to be a professional. You have to work. You have to have a job where you make for that. Yes, and then they have people that get benefits from traveling for the job, and you can get lunch. Let's say the meal. But you can only claim the meals when you travel.
Okay.
Yeah.
So anything that you can keep your receipt to show that, you know, this is part of what you do for a living.
Yes. Always keep your receipt.
So, Mr. Marcelin, you know, our time is really short, and you have so much to offer the community.
Yeah.
If people wanted to get in touch with you or would like to talk to you or would like to come and visit you, where can they reach you at?
Okay,
I'm looking really slowly.
I'm looking at 1424 Flatbush Avenue, Brooklyn, New York 11210. I'm not too far from the junction. Our phone number is 718-576-6601, or you can either email me info@maxrealestate.com. Thank you.
Well, you know, this is not the end of our show because you and I have to do another show because we have to talk about real estate. We have to bring the community forth. Now that we have so much money, we have to be able to spend it somewhere. Well, thank you for coming.
Looking forward to. Thank you.
Thank you. This is the end of our show. Hope you enjoyed it. Hope you learned something from it. We'll see you same place, same time. See you next time.
Petit Penda de Yaoundé, Alpha Ngungu Château d'eau, Ousmane Kwanda Awaga, Mbala Jules, Patrick Mboma, Maître Tchunga, très fort, Kester Adouala, Christophe Fotso, Lionel Châtelain.